IVM.
Welcome to Paisa, Vaisa with Anupam Gupta. This show is a way to help you navigate through the world of money, where to save, how to earn, what to invest in. All you have to do is ask.
Folks, welcome to Paisa Vaisa. This is our Thursday special where we take listener questions. I'm your host, Anupam Gupta, B50 on Twitter. I have with me Aashish Sommaiyaa, CEO of Motilal Oswal Asset Management Company. Ashish, we have a listener question. He's new to the stock markets and he wants to know, what kind of rate of return to expect if he's someone who's going to invest in equities over the long term. What's a reasonable number to keep in his mind? Just a range, I guess.
So, fundamentally, I think that, we're always very happy to have new joinees, who are entering our markets.
Sure.
But fundamentally, I think that why should someone enter the equity market? I think that should be clear. Not for returns. Yes, because returns is an outcome. You come for returns, but knowing fully well that return is an outcome.
Sure.
So why are you actually coming to the equity market is because, if I think that there is potential in the oil and gas business, doesn't mean I can set up a refinery. If I think that, two-wheelers are going to sell, doesn't mean that I can start manufacturing two-wheelers.
Yeah.
So the only way to enter into a business without starting it yourself is to partner with someone who's good at it.
Sure.
So you are entering equity markets basically to be co-owner or co-promoter or a partner with somebody who has great prospects as far as their growth is concerned.
Owning a business.
Yeah. And there are enough and more people in this world, who have a lot of capital but not enough ideas. That's people like us who earn every month but, have surplus money. So a lot of capital but not enough ideas. And then there are other bunch of people who have a lot of ideas but not enough capital. So Mr. Ambani is the richest man in the country, but yet he needs capital from the markets because he has so many ideas at such a grand scale that he would like to implement.
Sure.
So we are coming to equities because we think that there is potential in certain businesses.
Okay.
And ultimately, equity as an asset class will always make more than the lenders and these kind of people because its business is being run for shareholders. So we are coming to equity because we find growth potential. Now coming to what kind of return to expect. There are two ways of constructing this. Like I said that, we manage high quality, high growth portfolio. So one way to look at it is we see the underlying portfolio and say there is a bunch of companies growing 15-20% year on year in terms of their earnings. Yeah. So share prices can lead and lag, but if the earnings double in 3-4 years, then between 3 years to 7 years, sometime eventually the share price should actually track.
Sure.
So if companies grow earnings at 15 to 20%, then people should expect returns between 10 to
30%.
10 to 30%, provided they are anywhere between 3 years to 7 years, like a long holding period.
Yeah.
The other way people do it is they do it on a macro basis. So they say, okay, GDP is growing 6%, inflation is 4%. So, let's say 10% is the nominal growth. That's where the general public sector and, utilities should be. But private sector, should be more like 13-14%, which is where the index should be, which is a combination. And then I'm giving money to professional managers, paying them a fee. So they should do better than the index.
Correct.
So this is how the past has played out, more like 15% compounded.
Yeah.
But now we are not in an era where, in the past inflation was more like 7-8%, interest rates were 10%, so equity gave you 15%. Yeah. Now inflation is 4%, fixed income rates are 6-7%. So equity should give you 10-12%.
Sure.
So I would guide for the same real return, but definitely lower nominal return.
Got it. Folks, so that was the answer to a listener question. And if you want to know more about this, a more detailed discussion about this, listen to our 3-part series with Aashish Sommaiyaa, CEO of Motilal Oswal Asset Management Company on Paisa Vaisa, which you can listen to on our website or on our app. Thank you for listening.
Thanks so much for listening. That was Anupam Gupta on Paisa Vaisa. If you have any money-related questions, you can tweet to us at IVM Podcasts or email us at paisavaisa@indusvox.com. No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
He bends down to test the warm water for his bath. He comes here to quench his thirst for a hot shower and some podcasts. You can witness how he enjoys having other people talk about cool stuff in his bathroom. Indeed, it helps him with his loneliness. You can find more of his pieces on ivmpodcast.com, your one-stop destination where you can check out the coolest Indian podcasts. Happy listening.